Today, we'll take a look at Rolls-Royce and the prospect of investing funds into this symbol. As always, this isn't financial advice, but rather the presentation of my own research that might help you make your own decisions on the stock. Rolls-Royce, the manufacturer of fancy cars for the super elite and incredibly successful stock traders, right? Well, no actually, the car element of this brand is actually owned by BMW and trades as one of their premium lines. Rolls-Royce London, or RR on the London Stock Exchange, are a company who specialise in power generation, largely in the forms of engines and turbines used in many applications from nuclear power plants to planes, both civil and military. In fact, their own website states that 47% of their employees are involved in their operations in civil aerospace and that 35 types of commercial aircraft are powered by their engines. In addition to this, 19% of their workforce deal in power systems, which they say find application in lots of things, including in nuclear power plants. The other 19% then find employment in the defence sector, including nuclear power plants found in the Royal Navy's submarine fleet. That all said, the business clearly draws a lot of its revenue from civil aviation, so while people are going on holidays and business trips, they make some pretty good money. However, when a pandemic strikes, the money dries up. This was definitely the case with Rolls-Royce, and you see their stock take a nosedive in February 2020 as the pandemic started to take hold. On the 7th of February, having already suffered a little downturn, the stock sat at 235p a share. By the 3rd of April, it had plunged to 86 pence a share, and then at its lowest, it touched on 38 pence. However, it didn't stay there for very long. Just as an example to show you how hard COVID hit this company, in the 2007/2008 financial crisis, the company's stocks only hit a low of 89 pence. However, a strong recovery package set out by the board of directors has clearly inspired investor confidence, as they made quite aggressive changes to their production and stated they will look to pursue other lines of income while the civil aviation arm limps towards recovery. That, coupled with recent news worldwide that the COVID pandemic is nearing its final chapters, the public have already started to book trips away, reflected in the small surge of aviation stock price. Rolls-Royce slightly lagged this, but seeing as they power many of these aircraft, it does make sense that they share some of this surge. Following the UK government's announcement that set out the COVID exit roadmap, the Rolls-Royce stocks took a little upturn, opening on the 25th of February at 117 pence before then settling back down to around about 107 pence at the end of the week, but importantly enjoying a minor upturn throughout this recent period. Long term, I think Rolls-Royce will provide good returns, however they're likely to be a long play with little chance for any quick get-outs. They've had to issue more stocks during the pandemic period to keep afloat, so they are unlikely to return to previous highs in the short term. The nature of Rolls-Royce's business also means that airlines have to do well first in order to consider buying more aircraft powered by Rolls-Royce engines. However, obviously this doesn't exclude their maintenance contracts they already hold with existing airlines. That said, Rolls-Royce are a strong business, and while the worldwide downturn has affected them quite heavily, the investor confidence appears to be picking up once again. A good few analysts suggest that this stock is set to rebound later in the year. One analyst, Crispus Niagara, stated that he thinks 136p is possible this year, approximately a 25 to around about 27% increase. He stated on the 2nd of February this year that in order for this rebound to happen, the price needs to break about the 100p line, but also keep itself above this line. It broke that 100p line on the 23rd of February and then has managed to maintain it all week so far. A longer hold of this stock is likely to prove even more fruitful, as Rolls-Royce have stated they expect the total operational hours on their civil aviation engines to reach about 55% of what they completed in 2019. Seeing as the lucrative maintenance contracts for their engines only occur while the engines are operational, flight time is crucial for their recovery. However, going into the next year, hopefully the aviation sector will recover in general and we'll see higher operational hours on the engines that Rolls-Royce maintain. Some analysts maintain a hold position, meaning don't buy and don't sell, whereas an increasing number are now suggesting a buy position, which supports the fact that the stock is now beginning to confidently move upwards, likely only to be deterred by any hiccups in any COVID related recovery plans. As you can probably tell, I think now is a good time to buy in on this stock. We've seen some confident upwards movement in the stock price, with it breaking the 100p barrier and maintaining its position north of this barrier. That, coupled with the general news that we are now apparently on the back of the COVID pandemic and the impending relaxation of travel restrictions, I can't see there being much appetite for this stock to sink much lower. The forecasts of 25% increase on the stock are promising, if not a little conservative if you are willing to hold out in the longer term. But what do you think? Is it time to buy in, or are you waiting for something more to occur? Let me know below, and if you haven't already, please consider subscribing. I intend to produce more of these types of video, and so if this is something that interests you, there's plenty more to come yet.